today. Basically, it was a Friday. Happy Friday to everyone. I know it's a great day for most people. It was a great day for me too. But I had two trades that I entered using the three line strike bearish strategy and also the bearish engulfing strategy to the downside. So the first trade I entered to the downside, I had the three line strike indicator came up at 9:15, right? At 9:15, and something that I didn't do today, I didn't pay attention to the smooth moving averages, so I didn't see my EMAs. I didn't see that we actually cross above the 200 EMA pre-market. Generally, crossing above the 200 EMA is very bullish. If you're below the 200 EMA, that generally is a trend indicator. So above the above the 200 EMA, generally people look for buys. Below the 200 EMA or going like below the 200 EMA, generally the rule is that you look for sells, and above the 200 EMA, you look for buys. Sometimes you can see a reversal and then you start to come closer towards the EMA. So you can play it to the EMA, look for a bounce or look for it to cross below and enter a bear trend. But if you're above the EMA, generally you're in a bullish trend. So the first candle, as I said, was a three line strike bear, and I'll put it up right now. So the first candle, you had a three line strike bear strategy indicator and the engulfing candle. So it engulfed the previous candle, and also it was just a reversal of the last three bullish candles. So it's generally a reversal trade. And then also what I had was you have the MACD here like losing strength. So this is where I wrote down some of the strategy rules yesterday, and I decided, okay, generally if you have one of these engulfing bearish candles or also a three line strike candle and you have weakness in the MACD, you can generally see you can get the top of the trend and kind of play it to the downside. So that's where I was kind of confirmation bias messed up today. So I wanted the strategy to confirm my bias essentially. So I wanted it to play out the way that I thought it would play out. But I didn't even have up the 200 EMA that would tell me that we're probably in a bullish trend. And you can see the EMA is kind of showing you the way they're pointing up. The EMAs can kind of tell you the trend of the market. And also what I noted today is that you can see higher highs, higher lows. And this could have been a way for me to just continue with the trend. I could have entered on these bullish engulfings, but I believe after I entered probably the second sell side engulfing trade, I decided it's totally not worth it. So let me show you where I entered this one and where I got stopped out. So I entered this one at exactly 9:30, and I have it right here. Entered 9:30, short position on the 9:30 candle, and then let's bring it to where I got stopped out on the 9:45 candle. But let me make it a little bigger. But and then we can edit the settings here, and you can see enter the short position with an entry price of 29512. The profit I was looking for 293.12, and then the stop loss level I was aiming for 296, right? So you can see I got hit out as soon as price went against me. I generally try to keep the stop loss within range because you don't want it to suddenly start to go against you, and then you are just taking in so much risk to just to assume the trade. You're taking on too much risk. It's totally not worth it. So this is the trade I entered. Within the next 15 minutes, I got stopped out of the trade for a total loss of 111. And you can see I followed the strategy. So I saw some weakness in the MACD, the bullish MACDs. I saw some weakness, and if we had generally what we have where the weakness kind of continues, this would have been the top of the day, and I could have rode it to the downside. So I kind of went in a bit heavy on the first trade, thinking that I would have gotten that move to the downside. I didn't, and I kind of suffered the consequences here. But I'm fine with that. I'm just working on the strategy, finding the nuances. So a nuance that I noted today was just it being above the 200 EMA, look for the bullish trades. Being above the 200 EMA, seeing the EMAs kind of pivot to that side, or how can I show you? As you can see, the EMAs are more like trending to the upside. So generally, it would be better to look for the bullish engulfing candles or a three-line strike bull indicator, right? So I noted that today. So just reflecting on my mistakes today, I could see how I messed up on that one. The second trade was at 10 on the 10:30 15-minute candle. And let me see where I have it here. So 10:30, you minus 5 from this because this is UTC time. So you minus 5 from that. Um, and this is where I entered to the downside. I could see the market kind of pushed up here, kind of found a top. So it kind of found a level of like daily resistance. So I believed it would have pushed down from there. However, I was proved wrong as the market kind of started to step up at, I think, this candle, yeah, on the 12:45 candle, and I'll draw it out right now. So I entered to the short side on the 10:30 candle, right? The entry price was at 29730, and then I generally go for two times the profit. So ideally my profit would have been 29530 to make around $200. And then the stop loss, I was looking for a risk of 298. So I kept the stop loss within zero point 0.7 of the amount that I was risking, so I could only lose a max of 90 because I was trading 125 shares there. So 298. So you can see where my stop loss was hit out was on this bullish engulfing candle. Those notifications, when I get them to my watch, are like the most painful because you know that you're in a trend to the downside, and then I just get my notification from TradingView saying QQQ bullish indicator signal triggered. We're going to the upside because I basically have the indicator written down and it can tell me what this trigger means because I already described it in the notification or alert. So this, you can see I kind of hold a tighter stop loss, but I was looking for that trade to the downside. And you can see I was also trading this MACD weakness. So even though we had that MACD weakness, MACD leveled out and did not enter to the red side until like 3:30, and at that point it wouldn't do me any good. So I'm seeing where this would not have proved to be a good confluence if you don't have that bearish engulfing and then you have the MACD kind of getting weak. It still doesn't prove 100% that this trade would make you money, or even not for today at least. So even here we have a bullish engulfing. So we're done with the trades that I did today. I kept it two trades. So even if I lost it two, I'm not gonna trade anymore for the day. Just let that rock out. And then what I did was I saw the bullish engulfing candle here. And look at this. We still don't have a lot of strength in the MACD. So I don't see anything about this trade that would have told me get into this trade. It's going to continue rallying because there's not much other than just it being a bullish engulfing candle, and I guess it just riding the trend and going up. Also, we have here, what's this black line? Probably the 21, yeah, the 21 SMMA, so the smooth moving averages. So it's like the 20 EMA or the 21 EMA. That is like a shorter time frame moving average, and that kind of broke above the 200 EMA, which is kind of bullish on the short term, but it being above the 200 EMA just overall is like a long-term bullish trend. And I didn't see this because I wasn't paying attention. I actually removed that so my chart looked much cleaner and I could just focus on looking at the MACD and having the indicators form. So that's something that I actually noted today. If I had this up, maybe I would have seen it like, look, it's kind of crossing. And after this mistake, I'm generally I'm planning to actually focus and see that the EMA is telling a story as well, and you can actually ride it more a little bit with the EMA. Let's see what was happening previously. What's happening previously? So here we have, let me, I think I'm missing one of them, the 100 SMA. So here we have the market below the 200 EMA, below all of the EMAs, and you can see that the bearish ones were kind of more the trend, and the 21 EMA kind of was a level of resistance. Interesting. And here we have the market kind of playing with the EMA. This must have been a Wednesday. No, this is a Monday. Hmm. Some Monday, but this was a quite a tight range because the market is playing between the 100 EMA and also the 21 and the 50 EMA. That I hate ranges like that. I hate ranges like that. It's hard for you to even trade something like that. Maybe this isn't even the financial instrument to try and trade some of these stuff on because I'm not seeing the moves that I would have wanted ideally. I mean, something like here, something like this would have been a trade I was looking for today. So you're seeing weakness in the MACD, and you also have a three line strike bullish indicator print, and you also have a level of support here. So you could have rolled that to the upside, and also you kind of seen a bottom in. No, you're not at the bottom yet, but you could have seen a bottom in right here, nice, and entered to the upside before it started to trend up. Interesting. I'm interested to see what it looked like while it was playing out on that day so I can actually see. So we see the market pushing down, pushing down, pushing down, right? See the market pushing down. Let's go for the next candle. Okay, a solid push down. You still don't see the EMA start to form to the upside. However, you got a three line strike bullish indicator with the MACD weakening out. What are the EMAs saying here? What are our EMAs saying? They're not saying anything bullish as yet. So generally, I try to enter the candle directly after the three line strike bull, and you have your stop loss below the lowest part of the candle if you're in a bullish trend. Okay, okay, okay. So we can see the MACD kind of curving out there, curving out, and this is every 15 minutes. So you kind of have some time to think about it. So you have a three line strike print, three line strike bear print there. That's kind of to get you scared, like, hey, we're probably just coming back up to make a reversal, start to push down a bit, and then that's when it starts to push to the upside. That's when it starts to push to the upside, and it's mostly in the latter part of the candle. So within like the first 10 minutes, you have like a red open. Within the last 5 minutes, it starts to go green. Look at this. Well, we can actually see some strength in the MACD's lines here. The MACD's EMAs. Okay, what kind of EMAs you have here? All right, the 9 smoothing average. And what's this orange? I'm not sure what the orange is trying to indicate there. Color 3. What's this? Of a smooth moving average oscillator. Okay. So we see this start to break above. Hmm. So at this point, you'd have wanted to been in the trade from around here just to get the majority of the move. Hmm. MACD, you could have just been an indicator there, and then you start to sell it up here at the top of the MACD, some strong green candles, or it starts to level out. Mm. Mm-hmm. We'll leave it at that for today. I'm gonna work on the strategy a bit more to kind of make sure that when we hit the charts, we're always making money, or at least 80% of the time, right? But basically, that was it for today, guys. Hope you have a happy weekend. I should be doing a video this weekend about just some tool you can use or to how to use an application. And I hope you find that handy as well as this video. I appreciate you. If you actually watch this video, give me a like and subscribe. I hope to provide you some value more than what anybody else provides you on this platform. All right. I'll see you in the next video. All right, my guys. Bye bye.